let's dive in, Pete, to BJ's Wholesale Club.
Yeah.
Now, Americans are cutting back, right? And so they're going over to Walmart and so forth, and that's good for Walmart. Well, BJ's Wholesale, maybe they're going over there, right, Pete? Nope, not apparently. Total revenue, $5.21 billion, beat the consensus. Adjusted EPS, 109 versus a forecast of 100. But club sales were not growing as fast as expected. Membership fees increased, and a membership going up by 9%. Maybe that was part of it, Pete. But BJ's Wholesale Club, the report sounded like a good report. What do you think, Pete?
It did, and they had the digital sales. That was up 22%, and that's something that more and more of us are looking at when we're trying to analyze some of these various names that are out there. I think you're right. I think this comp sales number it's up 3%. That's just not what people were looking for. And I think across the board, they reaffirmed their guidance. That was pretty good. Membership fees are up about 9%. I think most of these numbers, if not almost all of them, John, looked pretty solid. But this is a stock that was probably trading very close, or it was trading fairly close to the 52-week highs. It's pulled back a little bit. This is another one where I'm looking at it going, okay, I understand that maybe there's a little bit of a reason for this stock to have gotten pushed down a little bit today. 7%, I'm not really sure that's right. And when I look at the PE of this stock, I start thinking to myself, this thing is maybe an opportunity. It's like we look at Costco and we look at all these various names out there that are discounters. I think this one makes a lot of sense down here at 81. I think it's gotten cheap enough that it's one where I'm not going to say that I would be interested in doing something today, but I think over the next couple of weeks, if this thing can stabilize and hold up where it, somewhere near where it is today, it might be a good opportunity, because I think that there's a lot more room to the upside based upon there's still a lot of trade down. We already know that because we've heard from the Walmarts of the world and the TJ Maxxes of the world, and now we've heard from Target, and they have their numbers. I think there's a lot of reasons why BJ's is being probably hit a little bit too hard, given what they performed with this last quarter.
Well, BJ's, the model seems like one, Pete, that people will continue to embrace. But again, you've got Sam's Club, you've got Costco. Those are two big competitors to BJ's. And obviously, both of those, Sam's Club, part of Walmart, Costco, standalone, they derive an awful lot of that revenue from those people that are members of those clubs, not just the people that walk into the free version of Walmart. So BJ's needs to maybe address that price of that membership, Pete. Maybe it is a little too high. But the last thing you want to do is refund a bunch of money to people after you just came out with a quarter like this.